Hey guys, welcome to today's video. Today's video is all about credit card debts, how to pay them off quickly and how to repair your credit rating afterwards. So let's get going, and starting with credit card debt. If you owe credit card debt, don't worry too much. Most people do. The average American has over $6,000 in credit card debts, so you're not alone. No one really teaches us about credit cards and about managing money and bank accounts and tax and all this kind of thing. At least when I was at school, there were no lessons on how to manage your money, finances or anything like that. So it's not surprising really that there are a huge amount of people that get into debt. So how can you pay off your credit cards quickly? Now, the most important thing really is, if you're able to, is to transfer the debt from one credit card to another credit card, which has 0% balance transfer, 0% interest for 18 months. If it's a lower amount, it's a lower amount, but I believe the highest you can get is 18 months. Now, if your credit's quite bad, you probably have to settle for 6 months interest free. But once you've got that transferred, then it will give you 6 months where you won't be paying additional interest on the balance that you're carrying over month to month. So that will just enable you to get the total down quite a bit and hopefully pay it off if possible. Now, if you don't earn that much money, you're going to have to really either cut back massively on your spendings, or just try and increase your income, whether that be an extra job in the evenings, deliver some pizzas, drive with Uber, whatever it may be. You're going to need to do something to try and get that balance down. Now, most people can probably achieve this just by trying to control their spending a bit more. Take one thing, and I always say this, but let's say it again. A Starbucks coffee, $5 roughly you'll pay for that. So that for 10 days is $50. For a month, $150. For a year, about $1,800. So little things add up across a year, and that's why you can get in debt in the first place, because many people, it's not just one coffee that they buy something else. They don't prepare their food, so they end up buying food when they're out. Just watch a few episodes of Millennial Money and you'll see just how poorly people manage their finances. So normally, even if you don't think there is, do go on an app online and budget and see how much you spend on each different area. So how much you spend on food, groceries, eating out, how much you spend on clothes, and try and save as much as possible and put that towards the debt. Now, if you've got different credit cards, the most important thing obviously is to pay the credit card off, which has the highest interest. So you pay that one off first and then the next ones. If you can also try and consolidate the debt. So this might not be possible if you've been missing a lot of payments and your credit's been damaged. But if you can, sometimes you can take out a loan which has got lower interest than your credit card, a personal loan. And then you can use that loan to pay off all of your 2 or 3 credit cards, for example, and then you just have that one payment, which is normally lower interest. So it makes a lot more financial sense than paying off 3 high interest cards when you can just pay off one personal loan that's a bit lower interest. So that's another option in regards to paying off. Now, if your credit rating has been damaged a bit, it's quite important to have a decent credit rating at least. It's not as important as people think in regards to buying a home or something, just because that's a secured loan. So as long as you've got the income there and you got a decent deposit, then they'll still give you a home loan even if you've got bad credit. So it's not too crucial for that, just because obviously it's secured. So if you don't pay it, they'll take the house and sell it. So the bank's sort of got their money guaranteed. They don't want that. They want you to pay so they can earn the interest over 20 or 30 years. But they have that option there, so it's not as risky as an unsecured loan or just a credit card, when you've got no assets. So improving your credit card debts, improving your credit score once you've paid off your credit card debts. The best way to start is to get another credit card. It's to get a secured credit card. So a secured credit card is a card where you go into the bank and you put in, let's say for example, $500 or $300, and that's your limit. Now that's the most you can spend. So if you spend $300 and you don't pay the credit card, then the bank at the end of the month, they'll take out from that $300 that you've left. So it's basically a credit card that's guaranteed to be paid because you're paying it in advance. And you know, that's something you can do with mortgages as well. If you're likely to forget the payments and things, then you can leave some money in there, just so if for whatever reason you haven't put money into the correct account and it's not going to leave the account, and it's not going to be paid, you know, because when you've got lots of different accounts and say various different real estate properties, for example, it can be easy to, you know, you forget to transfer money into a certain account or whatever, and then that way, you know, something might not be paid, you know, unintentionally, and it can cause, you know, your credit can be affected by just small, you know, just one missed payment. But you can leave money typically. I don't know if every bank does this, but you can, you know, pay one payment in advance. They hold that money, and then for whatever reason a payment doesn't go through, they'll use that money there, you know, to cover it, and then they'll let you know, and you can, you know, put it back in there. So, you know, there are ways to try and avoid, you know, missing payments and things. Now with, you know, the secured credit card, that's probably the best way to start building up your credit again. Another thing that is, you know, quite important really is, you know, trying to make small payments. So things like, you know, a phone contract, for example. If you get a phone contract and you make the payments every time, you know, that's good for your credit. You know, paying utilities and things, you can pay those on credit cards as well. You know, just making regular payments is what they like. Now another thing that's important with credit cards, if you start building your credit back up again, is that no matter what your limit is, you should only really spend about 10%. That's because you know, what banks like to see, they don't want you to have, you know, a credit card with 100,000 limit and you spend 100,000 every month and pay it off. They don't actually want that. What they want to see is responsible spending. So for example, if your credit card is $10,000, you spend $1,000 per month, you know, and that's showing that you, even with access to $10,000, you're still only spending $1,000. So you're spending responsibly and you're paying it off. So as far as credit rating goes, that's one of the best ways, you know, to improve it. So thanks for watching the video, guys. Give the video a like, subscribe, and I'll see you in the next one.